Since 2009, the world has been swept up in a revolutionary new method of payment. By showcasing digital currencies and a completely new financial system with a decentralized peer-to-peer payment system, the invention of Bitcoin quickly brought cryptocurrencies into the public eye. It's difficult to ignore how quickly cryptocurrencies are growing in popularity in developing nations, and cryptocurrency growth doesn't appear to be slowing down anytime soon. Here we will look at the development of cryptocurrency. Before we take a start, make sure to subscribe to our channel. A cryptocurrency is, in essence, a decentralized digital currency protected by cryptography. Cryptocurrencies use a decentralized system built on blockchain technology to track transactions and create new units rather than a central authority to issue or regulate them. There are countless different cryptocurrencies, each with its own features and requirements. With 200 million Bitcoin wallets and an estimated 106 million Bitcoin owners in 2022, Bitcoin remains the most widely used blockchain-based cryptocurrency. Cryptocurrencies caught the public's attention because they were novel and promised to address the inefficiencies associated with conventional financial systems, creating a discussion and debate around them. The increasing use of cryptocurrencies in developing nations. Due to their popularity in the remittance market, developing nations are among the biggest users of cryptocurrencies. The World Bank estimates that in many developing nations, remittances, the money that migrants send home to friends and family, can make up as much as 20% and even as much as 40% of the gross domestic product, GDP. More than 1 in 10 internet users of working age now own some kind of cryptocurrency, according to the Digital 2022 Global Overview Report, which was released by Data Reportal in collaboration with We Are Social and Hootsuite. Particularly in nations where traditional currencies are more susceptible to exchange rate fluctuations, this number is higher across developing economies. Since cryptocurrencies like Bitcoin are becoming so popular in emerging markets, some nations are declaring them to be their official currencies. These are typically nations whose economies are very dependent on the remittance market. For instance, El Salvador passed a law in June 2021 recognizing Bitcoin as legal tender in the nation, giving it parity with the US dollar, which had been the main form of payment up until that point. 95% of the remittances sent by Salvadorans who work in the United States go to their families who are still living in El Salvador, and the market for remittances accounts for over 20% of the country's GDP. El Salvador and many other developing nations depend on these remittances to maintain their economies, and cryptocurrencies are quickly gaining popularity as a means of remittance. The unique opportunities that cryptocurrencies present for enhancing people's economic freedom globally can be used to explain why they are growing in popularity in developing nations. These possibilities are brought about by 3 key features of cryptocurrencies: their accessibility, their quick and inexpensive transactions, and finally their capacity to combat corrupt government officials and weak national currencies. Subscribe to our channel now for more crypto-related videos. Let's continue. Accessibility. Cryptocurrency is proving to be a useful tool for developing nations to address problems caused by a lack of access to conventional financial systems. Cryptocurrency is proving to be a useful tool for developing nations to address problems caused by a lack of access to conventional financial systems. Due to the dependence of many developing nations on the remittance market, the absence of traditional financial instruments like banks can have detrimental effects on developing economies. In contrast to the traditional financial market, cryptocurrency is easily accessible via internet access and does not require a physical infrastructure. As a result, cryptocurrency helps bank the unbanked. Lack of physical infrastructure and expensive fees, particularly for mobile banking, have made it difficult for people in developing nations to access traditional bank accounts. Many are consequently denied access to conventional financial services and are unable to accept payments from abroad, which restricts their ability to engage in online commerce. As a result, people in developing nations with little access to traditional banking infrastructure can use cryptocurrencies to access the financial services they need online without opening a bank account or using physical banking facilities. Low costs and speed of transactions. Traditional financial systems can be expensive and time-consuming for both the sender and the receiver to use when transferring money. These fees and delays are frequently seen as a disadvantage to traditional financial systems because many developed countries rely on the remittance market, and cryptocurrencies are seen as a solution. Cryptocurrencies allow for quick and inexpensive international money transfers, making them a viable replacement for the conventional methods of receiving remittances. They are decentralized networks that obviate the need for a middleman. Due to the user's ability to transfer money without involving a third party, international fund transfers are completed faster than they would otherwise be. Unlike conventional fund transfers, which frequently take days to process and approve, cryptocurrency transfers are frequently finished in minutes, needing only the network to confirm the block containing your transaction before being fully settled and the funds becoming available. Remittances are frequently made in larger amounts less frequently because this offers the most value with the fewest fees. This is because traditional methods of transferring money are also frequently associated with high fees. By significantly lowering these fees through the use of cryptocurrencies, more options for international finance are made available. The people who send remittances back to friends or family in their native countries can send smaller sums of money more frequently because they are not charged transaction fees. Taking action against corruption and weak national currencies. Cryptocurrencies are being used more frequently in developing nations where there is widespread corruption, hyperinflation of the local currency, and a long history of economic hardship. These problems typically result from the financial system, and cryptocurrencies are frequently seen as a solution that can help in resolving them. Due to traditional financial systems, developing nations have endured decades of restrictive banking practices, deteriorating infrastructure, unpredictable inflation, and unstable exchange rates that continuously devalue their fiat currencies. As a result, cryptocurrencies have become a solid replacement for weak national currencies. Due to their decentralized nature, they are not governed by governments or banks, so access cannot be limited and their operation cannot be changed. Additionally, they are not as susceptible to market fluctuations as fiat currencies are. Resulting effects? The factors driving cryptocurrencies' rising popularity in developing nations appear to point to it as a potential solution to the numerous issues these nations frequently have with the conventional financial system. Despite its rapid growth and increasing use, cryptocurrency still has some serious disadvantages, and the consequences of its use should be considered. While there are a growing number of companies that accept cryptocurrencies, it is not widely accepted or internationally recognized. This severely limits the places that users can spend their money, something that is not an issue with traditional methods of payment from recognized financial institutions. Cryptocurrencies are not globally recognized as legal tender, with 80% of the world's central banks being either not allowed to issue digital currency under their existing laws or having legal frameworks that are ambiguous and do not clearly allow its use. There is also the problem of cryptocurrencies having a limited supply. Bitcoin, for example, has a maximum supply of 21 million bitcoins to mine, meaning they have a finite supply, and the price is the only variable that can change to ensure demand. Additionally, since cryptocurrencies lack liquidity, are not widely accepted, and do not have a stable value, they cannot be used to store value. Due to this growth rate's unpredictability and inability to be controlled, cryptocurrencies are extremely volatile. So this is how crypto has developed through time. Do share your views with us in the comments. Make sure to subscribe to our channel for more updates.